Domino's Pizza isn't just tossing dough, it's redefining fast food with innovation and strategic savvy. But beneath the sizzling success, are financial pressures kneading trouble into its future? In this video, we'll slice through Domino's financial layers, exploring its high leverage, robust cash flows, and the real implications of its market valuation. Is this a delectable investment opportunity or a recipe for caution? Stay with us to find out if Domino's truly delivers for investors. Domino's Pizza isn't just serving slices, it's delivering innovation on a global scale. With its robust franchise network and cutting-edge digital platforms, the company keeps the dough rolling. Yet, as health-conscious trends gain traction, there's a potential bump in the road. Still, if Domino's can adapt its menu and services, it might just continue to hit the spot for investors. Domino's Pizza exhibits high leverage, with long-term debt significantly exceeding cash and equivalents, leading to negative cash minus debt figures. While this is a concern, the company strategically manages its debt, maintaining a holdco leverage ratio below 5.0x, allowing it to suspend scheduled debt amortization and preserve liquidity. Notably, negative retained earnings have improved over recent quarters, indicating better net income retention. The marginal increase in share buybacks, despite the debt burden, signals a commitment to shareholder value. Overall, while high leverage poses risks, the company's debt management and improving earnings may present potential opportunities for value investors. Analyzing Domino's income statement reveals key profitability trends. While the gross margin hovers just below the ideal 40%, peaking at 39.81%, it reflects solid operational efficiency driving revenue through higher same-store sales and new openings. The Isganda and A margin remains favorable under 30%, though the uptick to 21.92% signals increased administrative costs from rising labor expenses. Notably, net income margin improving to 13. 60% suggests effective cost management, even if it hasn't reached the 20% benchmark. EPS growth fluctuations highlight the impact of strategic initiatives like digital enhancements and standardized advertising, demonstrating Domino's ability to offset cost pressures, a positive sign for its financial health. Domino's Pizza exhibits a strengthening free cash flow trend, culminating at $145.6 million, indicating robust operational efficiency and cash generation capabilities. This upward trajectory is supported by increased net income and favorable shifts in advertising fund assets. However, the CapEx margin remains elevated, reflecting significant capital investments in technology and supply chain enhancements. While these expenditures may bolster future efficiency, they also pose a risk if returns don't meet expectations. Stock-based compensation stays stable, suggesting consistent employee incentives without diluting shareholder value significantly. Overall, the company balances operational cash flow with strategic investments, a positive sign. But the high CapEx warrants cautious optimism. Domino's Pizza Inc. demonstrates revenue resilience, maintaining consistent quarterly figures between $1.08 billion and $1.4 billion. This stability reflects the company's hungry for more strategy, emphasizing sales and store growth. Net income trends align with revenue, stabilizing between $0.13 billion and $0.16 billion, indicating effective cost management despite rising labor and commodity expenses. The synchronization of revenue steadiness and net income growth highlights Domino's focus on operational efficiencies and market expansion. However, external challenges like foreign currency fluctuations present potential risks. These financial trends suggest a company effectively navigating industry headwinds while pursuing growth opportunities, factors pertinent for value investors to consider. Positioned just below Yum China in market capitalization, Domino's Pizza exhibits a strong industry standing bolstered by strategic brand enhancements and operational efficiencies. This solid footing suggests underlying fundamentals that may appeal to value investors seeking stable growth prospects. Nevertheless, potential risks such as commodity price volatility and rising labor costs could impact profitability, warranting careful consideration. Domino's demonstrated resilience in navigating market dynamics indicates a competitive edge, yet ongoing assessment of market conditions remains crucial. Evaluating these factors is essential for investors analyzing Domino's potential for sustained value in a fluctuating economic environment. Examining Domino's DCF valuation reveals periods where the market price diverges from intrinsic value. Recently, market prices have exceeded the DCF equity value of $371.99, suggesting potential overvaluation. This indicates that investors might be optimistic about the company's strategic growth plans. However, value investors should consider the risks posed by macroeconomic factors that could affect future cash flows. The gap between market price and intrinsic value highlights the need for careful analysis. Such discrepancies can offer opportunities for those identifying mispricings, but they also emphasize the importance of assessing external conditions that impact the company's true worth. Domino's P/E ratio, slightly below the industry average, suggests it's valued in line with peers, reflecting steady earnings expectations. However, the negative P/B ratio indicates a negative book value, often a result of high leverage or significant share buybacks. This financial structure poses potential risks, like increased vulnerability during economic downturns and possible constraints on future borrowing. On the upside, it might reflect efficient capital management and a focus on shareholder returns. For value investors, it's essential to weigh these factors carefully, considering whether the company's operational strengths and cash flows outweigh the balance sheet concerns. Analyst projections indicate that Domino's Pizza could experience substantial stock price appreciation, reflecting confidence in its strategic growth plans. This suggests the market may be undervaluing the company, presenting a potential opportunity for value investors. However, risks such as increasing labor costs and commodity price volatility could impact profitability. The company's ability to effectively execute its strategies will be crucial in realizing the anticipated growth. Assessing the balance between these potential rewards and risks is essential in determining whether Domino's offers a compelling value investment opportunity. Domino's Pizza slices through challenges with innovation and strategic debt management, serving up robust cash flows and steady net income growth. High leverage and potential overvaluation are hurdles, but operational efficiency and a focus on shareholder value keep them in the game. As health trends shift, adaptability is their secret sauce. Hungry for more insights? Check out our next analysis to see how it could spice up your portfolio. If this delivered food for thought, subscribe, give us a thumbs up, share with a friend, and let your voice be heard in the comments below.